Hey, good morning. Comment allez-vous? How are you? I don't know if you can see that. Blah, look at that green stuff. Blah. Hey, it's what you got to do. Be a middle-aged supermodel. That's what you got to do. At least I keep my clothes on when I appear on the internet, huh? All right, so let's get going. Welcome to Forex.Today, the YouTube community. Almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis, the overriding goal of trade planning. Let me remind you that trading is risky, even if you're planning. Your past performance, good or bad, not necessarily indicative of future results. Therefore, it's not appropriate for everyone. I recommend to be small, to stay humble, focus on the long term, never risk money you cannot afford to lose. Well, if you go big and you're not humble, guess what? You will get small and the market will humble you. So let me know how it can help. Technical analysis, fundamental analysis, all that's fair game. In the description below, you will find additional resources besides this live stream. A link to my book, Strategic and Tactical Forex Trading. A link to free training videos on YouTube, on the Trader's Way channel, on the FX Bootcamp channel, on the Forex.Today channel. There's a link to fxbootcamp.com, which offers 65 hours of premium for foreign exchange trading, day trading, swing trading, position trading, price action, monetary policy, macroeconomics, trader psychology. 65 hours of videos for $88 a year. Cool. Also, there's a link to tradersway.com, a service provider that you will need for your successful Forex trading business. The service they provide is foreign exchange brokerage. I believe them to be trustworthy, ethical. They provide fast execution speed, narrow spreads, huge swaps, above average good-looking people on the customer service desk. What more do you need? Okay? Give them an opportunity to earn your loyalty and respect like they earned mine. Go to tradersway.com or click the link that's in the description below. Open up that demo. Get involved. And I think that's pretty much where we need to be now. Oh, I forgot to mention, later today, we are doing lecture number 3 in the oil trading course, otherwise known as the Energy Complex Made Easy. So you're going to learn today about geology and seismology. Pretty simple. If you're standing in a field, do you think there's oil on your property? Well, how would you know? Well, that's where understanding the geology is important. And then let's say you study the geology and you're like, yeah, there's a really good chance there's oil beneath my feet. 4,000 meters. By the way, 1 meter is a little more than 3 feet, Americans. 4,000 meters, 5,000 meters, 7,000, 8,000 meters below your feet. There might be some oil. Would you be willing to risk, let's say, an $8 million investment and see if it's down there? You're like, wait, before I drop 8 mil, isn't there another? Can we confirm it somehow? Yeah, well, I'm going to teach you that as well. So anyways, interesting, right? Where can you find my chart template toolkit? Nowhere on the internet. So I haven't looked into it. I guess I got to yell at my developer, but there's supposed to be a part of the site where he's adding them. Maybe he did, maybe he didn't. I don't know. Where do I find the time to yell at people to do their jobs? Well, I guess I don't find the time, so I can't do it today. maybe Thursday. Oh, well, Thursdays are pretty busy. So anyways, yeah. All right. A little bit of a blip, a little bit of recovery in US dollar. Cool. Yen still weak. Fine. Swissy stabilizing. Pound still weak. Aussie still strong. So a little bit of change here from solid risk on to maybe a pause. But of course, I believe all this risk on is actually profit taking on the risk off side. And that the big event is tomorrow for the ECB meeting. So all of this makes sense. This should be a nice and easy meeting today. Okay. And where we were yesterday was looking at all the exit zones on the yen pairs. Okay. And this trade, by the way, look how perfect it is. Okay, you see that? This trade we call an OOP. It's in the training course, and it predicts exactly that. Whoa! And yeah, you should probably take profit. You don't know if this is a... See, that's a weekly trade. Your monthly trade might be a little bit higher, but since, anyways, it's a clear opportunity for a weekly swing for you to take profit and get out. And you may notice that many of the, if not all, but many of the yen pairs are at that price. Here's another example of potential exhaustion. Okay. Well, you could still do this, but you'd need all the yen pairs to do the same. I'm not a bull on pounds, so there you go. Kitty cat, I am a bull on. And let me zoom in here. Okay. This one has the potential to go higher, and I'm watching this line in the sand. Oh, and I forgot to mention, I actually was long this trade, and I did take profit. It wasn't a lot of pips, but 80 pips or something. So anyways, cat I'm still on because I'm much more aggressive on kitty cat, and therefore I don't really want to get out, but I could move my stop here. Okay, I could if I want. I guess it should still be below this. Hang on. Okay, but there's still a chance for something like this. But I'll have to pay attention. If the other yens don't want to do it, then forget it. Okay, so here's another example. I can move my stop here. And once again, a real classic trade. And this is clearly the exit point. And this market is behaving just as it should. Aussie yen was perfect. And this was nearly perfect. So really it comes down to whether you believe the next move is this. Oops, let's do that in blue. Or if everyone bailed on it because of the ECB meeting tomorrow. Well, Frank, yeah, it has to do with the trades are over. On a weekly basis, they're over. On a monthly, they're not quite, but many of these trades are set for an inside month. So like, for example, this bottom predicts this top. So when you get here, when you get here, you should probably do something about it. Jam your stop or hope it goes higher. But that's not what this chart says, right? This chart doesn't say that we're going to go up here. The chart says we're going to go here. So if you're just trading what the technical analysis says, right, Frank? You're just like, well, give me my money and I'm done, especially with the ECB meeting tomorrow. Okay? And then euro, hey there, boo-boo. Okay? And this is a classic counter trend trade. Again, straight out of the FX Bootcamp training course. You know, this sets up a counter trend back to the central pivot. And then if I were to guess, I would go this way. But what it says in the training course is this often happens, but then it could continue this way and it can continue that way. There isn't consistent data, or at least I haven't observed it. But this is, massive profit taking. And this could be a change in trend if people are buying it. Now, I would argue, I don't think people want to buy euro. So, okay, that. But if we have a change in philosophy for the market from risk off to suddenly risk on, well, then this, despite the euro, will probably still go up. So you just don't know. Oh, yes, you're right. There's other things going on. Thank you, Frank. You're absolutely right. Bank of Japan. Oh, for sure. So that's that. One of the things I picked on, one of the things I picked on last night was pound. And we were down, I guess we were probably on this candle last night. And I put an order here. And my trade plan was up, 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 up. Okay. And, I was right on direction, but wrong on the entry. Shit, huh? Huh? Anurag says, hey, as medium-term traders, we must get away from the euro. I just don't want to buy the euro. See, I don't trade pure technical analysis. I love technical analysis. I love it. But I don't want to own the euro. I don't care. Oh, it's going up. I don't care. I look at it as an asset. So look, euro's going up. I couldn't care less. I don't want to own it. It's irrelevant to me. I don't want to own it. I've analyzed it fundamentally. It's an asset that I don't want to own. So it's going up. Who cares? Now, I would argue that it's not actually going up. Euro dollar, for example, which is 40% of the entire market, okay, was heavily, heavily, heavily short. And then going into the ECB meeting with an expectation of raising interest rates and that Madam Lagarde is going to, announce some new policy to save all of Europe. Okay, great. People are getting out of their short trades. Doesn't mean they're long. Euro dollar's going up. Doesn't mean people are buying euro dollar. So it's going up. I couldn't care less. Now, could you trade it? You could trade it. I just don't want to own the asset. Okay? Okay? Now, and if you believe people are buying it and driving it up, that this is a turning point in the market, then you should buy it. But I don't want to own it, so not interested. And it's going up, so I can't sell it. I only can sell something that's falling. So that's all. Okay. Anurag did really well. Buying pound yen and selling pound Aussie. Yeah, that's cool. So anyways, I missed this one. So I need to cancel it. But you see what my trade plan was? Up and then down. So I was correct. I just didn't get my entry. Looking at Aussie CAD, I did get it. So now I can move my stop to break even. So the other one I didn't get, but remember, we were down here when I set up the trade. It came up and then dropped. Cool. So now we stay below this, these moving averages, and I make money, or it comes up, knocks me out, and I don't lose money. Okay. So missed the first one, got the second one. Okay, pound Swissy, somewhat range bound. Okay, but look where I am. I sold here. Oh la la. Okay, ooh la la. So now it's doing nothing, but it's doing nothing quickly. So, ultimately the target is here, and it's not even a good target. It's just, I think that was just 333. So it was just a standard target. I'll probably move that later. But nonetheless, didn't want to trade it last night. Okay, yes, I wanted to sell pound, but Swissy hadn't developed as being bullish yet. And then one last one. Here's the one Anurag got. We were here last night. I set my limit, and I didn't hit it. So I was correct on direction, correct on, I think the analysis was all valid, but the market took off without me and left me behind. So once again, I got to rip that out. So good trade plan, just didn't get filled. Gold! Dang it! Don't cry. Hey, you know what? I should be happy, though. I got one of them. Okay, taking a look at Euro. Okay. Euro still very much sideways against Kiwi. Euro still pushing the dollar up. Euro beating Aussie, although, right, that's one I'm on. See this one? That's my range-bound trade, so maybe we can take a look at this one. This was a range trade for me. So I had marked the top, I had marked the bottom, so I sold at the top. That's how you trade a range. And now we got a breach. Now we're down here, so lower low, connect the dots. No. Take the parallel. No. Okay? And so what could happen here is an up and a down, and then I'll be right as rain. I'll lock in some profit. Not much. Huh? It's not a lot of money to lock in, but if it pops back up, I want to be out. Hey, it puts gas in the Bentley, right? And what else? Here's a failed one. I lost money on this trade. I was short somewhere in here, and that popped. These were trades that we set up quite a while ago. I don't remember. I guess it was a swing trading group on Thursday. So it was in here, but I don't believe we had it up yet. So the analysis back then was this 3,200 is a sell zone and this 3,350 is a sell zone. And so I sold it. Ouch! Okay, boom. And we're back. So I don't know. I guess the vol killed me, but we'll see what happens from here. Okay. Richard says, when you don't get in, does that sometimes force you to change your plans? Well, see, I'm sleeping at that period. That's why, like for everybody here that has a day job, much of what I do is swing trading. I analyze my trades in the evening. I throw down limit orders and I go to bed. So in that case with the pound, I had 3 trades selling the pound. 2 of them never got filled, but I was correct. It's too bad, huh? But the third one, I was correct, and I did get filled, and great. And then the idea is sit on it for several days. So if you are a trader and you only have, let's say, an hour a day to focus on trading, or even an hour a week if you're going to do swing trading, proper swing trading, because that would be like Sunday afternoon, you do all your planning, set all your limits, and you're done for the week. So if you don't have much time, swing trading is perfect for you. And even if you have all the time in the world, I still love swing trading. It's my bread and butter, so to speak, and always has been. And when you look at day trading is a variation of swing trading. And position trading is a combination of day trading and swing trading. So again, you don't have much time because you have a day job. Swing trading. You got to get in the swing trading group, man. I'm telling you. So anyways, that one I lost on. So yeah, I'm not ready. So like I want to buy dollar. And I don't want to buy dollar there. I don't want to buy dollar there. 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 So I'll just pass on everything. By the way, I came to that conclusion on Sunday, and I'm really glad I did because I would have had, I would have had 5 or 6 losing trades because I'm a bull on the US dollar. I'm a bear on the euro. And that's what's been doing well for me over the last few weeks. But on Sunday, I did analysis with the day trading group, and I'm like, you know what? I don't see it. I don't see it. I'm concerned. I see the opposite. I see euro strength and dollar weakness, but that's not what I want. That would be counter to what my strategy is. So I said, I'm not going to sell euro this week. I'm not going to buy dollar this week, and I'm going to pick on the yens. And man, was that great. And I'm happy for it, not for the pips I made, but the pips I avoided losing from making a good decision. Okay? So thank goodness. So anyways, there's nothing there that I really want. Take a look at commodities. Okay? And we're back at this neutral point. Look at the trade plan from earlier. Up, 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 down, down, kicking off the 382. But okay, if you trade off the 382, your target is 1618. So my concern now with oil is that it was supposed to go to 106.5. So maybe the trade plan today is buy it at 102, take it to 106. Okay? But what typically happens, and that's why I'm worried, is you should have bought it at 100 and taken it to 106.5. So the fact that it failed out on us, failed here, right? Yeah, it's concerning. But hey man, if trading was easy, right? So anyways, that still may be the plan. You if you wanted to, you could update your fib and do stuff like that. I consider this still the original plan. And so it'd be like a price action play now, not a fib play. Okay. And it won't let me grab it, but I guess I can do it this way. You're going to try to kick it off of there. So watch your 101.5 to 101. And if you get some if you get some bid off that price, then the target is still 106.5. Okay. Okay. And that would be a change in direction. That'd be a huge change in direction. That'd be very bullish. But maybe not today, so be careful, huh? Are you watching Bitcoin? Bitcoin is throwing off bullish signals. It's made the higher high. This was my very, very concerned point. Okay. So if we can maintain this on Bitcoin, so let's say like this for the rest of the week, then I want to do the exact same thing with oil. Okay. And oil actually has a use case. Now, looks like Biden's going to get a bill passed. Good job. And what are they calling it? It's some sort of, I forget what they're calling it now, but it's an environmental thing, right? Which is interesting because what I'm concerned about is this passes and gets into law, and there's going to be funding for putting air conditioning into public housing. And then there's going to be an increase in regulation on the companies that produce the energy to power the air conditioning for people on welfare. So it's going to be an interesting, I mean, I have to double check those facts. But it's interesting. It's interesting that it's an environmental environmental emergency funding, and I'm not entirely clear if that's actually what it's designed to do. So, anyways, I'm going to have to look at it and see if any of that is truth. I mean, I haven't seen it; I've only heard about it. So we'll see what's in that package. But Biden's going to declare an environmental emergency, which allows him to do some funding. So I don't know if it's actually a law. It could just be like Trump, for example, couldn't get law passed to build a wall for Mexico, so he did some sort of emergency funding, by hook and by crook got part of a wall built. And so Biden's doing the same thing where it's under the guise of environmental concern because the weather's so high, but right, but yeah. Well, anyways, we'll see what's in that. Yes, it's hot. Okay. But when I grew up, and I grew up poor, we didn't have air conditioning. I don't know if I ever knew anybody that had air conditioning. Very few people I'd ever known as a child had air conditioning. But anyways, what's your opinion on harmonic patterns? There's a lot of validity to harmonic patterns, so I'm not going to say anything negative. Well, I will say something negative about them, but I would say generally they probably work. But ultimately they're very, very similar, right? They're very, very similar. There's studies that find patterns that other more simple studies find the same patterns. So in my humble opinion, when you're looking at like the angle between this, that, and the other thing, I don't know, I guess maybe I should draw something so I'm not going to, okay, let's just pretend this is some sort of harmonic pattern. Okay, I'm not saying that this is a harmonic pattern, but let's just say that is. Okay, cool. And very often it's more like you measure this, and what is the angle to there, and what is the angle to there, and what is the angle to there, and this means this, and this means that. And so you might say, well, then that is going to predict this, 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 and this. Let's just say. And you're doing all these calculations to get something where I just say, well, just do that. Like I'm not measuring these angles, and I'm not measuring the pattern in the same way. And again, I know this isn't a valid pattern. I was just throwing down something to look at, right? But very early on in my career, being self-taught, I was not confident in what I was doing. I just knew what I was doing worked for me. And so at the very, very, very first Forex Trading Expo, I was a keynote speaker. It shows you there wasn't very many retail Forex traders, right? Now, a few thousand people showed up, but as far as speakers were concerned, there was only maybe, I don't know, a couple dozen of us that had any retail Forex trading experience. And most of the speakers worked for brokers, right? I can think of some of the names. Anyway, so I get there and I'm like, okay, I'm a keynote speaker. And I'm like, all these other guys are working for brokers and they have more experience than me. And this, I've never spoken publicly as a Forex trader before. All my other stuff was venture capital related. So anyway, so I'm like, well, I'll show people what I'm doing and maybe it'll be helpful. And then I decided, well, I should go see what the other guys are doing because I'd never met another Forex trader. So I honestly had no idea at all what people did. And so I go to one and he's doing harmonic patterns. And I'm like, oh my God, I'm an idiot. Because again, he's calculating the angles of this and this and this. And I'm like, oh my God. And therefore that angle should be repeated here. Some weird stuff, right? And I'm like, oh my God, I'm so simple. I had no idea that that's how people trade because I look at this and I look at that and I simply want to buy a dip. And it's so simple. And I would use a moving average that comes across like this. And so I'd say, well, now with the higher high, I want to buy a higher low and I want to go up. I'm like, that's all I got. I remember thinking like, that's all I got. I'm a simpleton. I'm embarrassing myself. I just did this presentation on buy a dip to a moving average. Watch a 5-8 cross. And I'm like, I'm such a simpleton. But the saving grace here on this one is he gets about 45 minutes into his hour presentation. And then he realizes the slides are wrong. And he's like, oh, wait, what? And he's like, no, everything I just said didn't make any sense. And I don't remember what it was supposed to be. And I'm like, it's so complex that you could screw it up. Now, you got to remember, before I was a Forex trader, I was a venture capitalist. So I would look at complexity as a risk. If your mousetrap has 150 complicated parts, right? It's basically a Patek Philippe watch that kills rats. You have all these complications. I'm like, wait, first of all, that's going to make it expensive. But B, this stuff's going to break. And right? And nobody wants to pay $1,000 for a mousetrap. So complexity is bad. Simplicity is good. And that was a moment in time that was a real confidence booster because I said, I don't do any of these weird patterns. I'm not calculating angles. I'm not doing this and I'm not doing that. I decide if I'm a bull or not. Right? That's it. And I buy dips. And then it returns back to the moving averages, and I buy dips in an uptrend, and I sell rips in a downtrend. And I use some moving averages and maybe an oscillator or two just in case to measure things like overbought and oversold conditions. But what I'm doing is incredibly simple. Is it Good Fee? Good Fee says, hey, well, you have a long-term outlook and they don't. Well, this was 18 years ago. 18 years ago, I did not have a fundamental bias. I didn't know. I was still figuring out, like 18 years ago, 19 years ago, I was like studying the mathematics of a moving average convergence divergence indicator. It wasn't even called MACD. So I was studying the math. Like I was still figuring out technical analysis. I think 19 years ago or 18 years ago, I had already settled on my moving averages, but I was trying to find other tools that would be helpful. I remember I was doing some very complicated stuff with RSI to see if that would help. Okay. But I didn't have a fundamental bias. It wasn't until after, getting my Series 3 with the CFTC. Doing the Series 3, they trained me on how to hedge wheat prices as a grain elevator operator using things like futures contracts or options. Okay, that kind of stuff. And it got me a little more focused on how the markets worked. And so we looked like, okay, you wanted to do a crack trade where you're buying soybean futures, but selling soybean meal futures, or you were trading Kansas City wheat against Chicago wheat, or red winter wheat versus a different wheat. And, we're doing all these things and then hedging and all that kind of stuff. But it made me think a little bit more of the rationale. So back then, I traded Aussie like it was gold. In fact, my chart for Aussie dollar was labeled gold, and USD CAD was oil. And so I knew there was some rationale and some reasoning to why certain currencies moved in certain ways. But it wasn't until going after my Series 3 and studying that it really piqued my interest of like, okay, now now that I know how to measure foreign exchange markets using technical analysis to tell me whether it's overbought or oversold, whether it's trending down or trending up, through my strategy of separating market from price using multiple methods. I mean, multiple methods all to do the same thing, separating market forces from price action, or really price action from market forces. Cool. So I got all that down, and then I started to explore, well, why, if gold seems to move Aussie dollar and oil seems to move Canadian dollar, what about everything else? And that's how I got into the fundamentals. But at like the first foreign exchange trading expo, my recommendation was when you get to news, what I called announcements, you just avoided them. Right? So you have to remember, this is where I came up with the idea of smart plans. Okay? And A was announcement. So I would say now that you have a tactical plan, if there's an announcement today, or let's say there's an announcement tomorrow, a big one like the ECB meeting, that will probably screw up all your technicals. So avoid that. Okay, that's where I was at that. And this later became my book. So when I presented this as a keynote speaker, it later on became a book, right? That's Strategic and Tactical Forex Trading. And so you can see that I had already been doing that for years by that first, and I think we're talking about 2005. I think it was, if I were to guess, 2004, 2005. So I had already figured that out, 2002, 2003, 2004. I had already been trading this way. So, but then later I added the fundamentals. Okay. It took me a while. So it was more like, I think I started, I have to figure out where I was. So my office is, does anyone know EA Sports? EA Sports, it's in the game. I had an office on the EA campus in 2004, 2005. So I had already moved out of my home office and would get to work at, I think it was about 4 o'clock in the morning, and I'd trade all day. Whew. Trade all day. And so that was that period when I started to question, or not question, but ask the question, why does the market move the way it does? Not just having, because I had studied for years how the market moves. And then I wanted to know, why does it move? And that was probably more like 2006. Coolio. So that's me. Nice to meet you. Those offices were pretty cool too, because they had a labyrinth. So I remember, usually about 10 o'clock in the morning, that was in California time. The markets had cooled off. I'd been trading all morning. And very often around then, I would go outside just to get some fresh air. The light had finally come up and all that kind of stuff. And I'd just go out and get some warm sun on my face. And I'd walk this labyrinth and meditate, which was kind of cool. And then I'd walk across the street, and there was a Starbucks, and I'd get my big old Starbucks. But another thing I remember in that period, to give you a sense of interest rates at the time, I had left like a couple of $100,000 in my PayPal account. And I was earning thousands of dollars a month in interest on my PayPal account. It was funny because then, I had money in my bank account, but then PayPal was paying me more in the bank account. So it was just funny. So I left, I don't know, like 250 or something in there. And I was earning, I remember one time it was many thousands of dollars a month in interest. And I just couldn't believe it, because what they were doing was throwing that into like a money market account or something. And I remember looking at it going like, damn, like that's good money. Like it was real money. It was like crazy. I couldn't believe it. It was just crazy. So I believe the Fed funds rate was like 5.25%. So my PayPal was probably paying like 6.5%. It was pretty amazing, man. It was pretty amazing. And of course, eventually all that came crashing down, right? When Ben Bernanke got hired. Not that it was his fault, but I found this book the other day. Where is it? Oh, yeah. So when that happened, I bought this book right here called Inflation Targeting, written by somebody named Ben Bernanke. Okay? I didn't know Michigan or Posen. Now I do. But so that's what I was doing when that happened. And so I was preparing, okay? So I was learning about inflation and the relationship with inflation and interest rates. In particular, though, I bought it because Ben Bernanke was just nominated to be chairman of the Board of Governors and therefore the head of the Federal Open Market Committee. So I'm like, oh, Ben Bernanke, I should get to know him. So I read that, and then, if it's here, I have a box of books here. That's what I'm looking at. No, maybe I don't have it. I think it's in the closet. Yeah, it's in the closet. Yes. So the other book I bought had to do with Ben Bernanke's research on the Depression. See, that's what his expertise was what the Fed was doing in the Great Depression and why it didn't work and what made it worse. So his expertise was in depressions. And I'm like, that's interesting that the FOMC is bringing in a person that understands inflation and a new regime of managing inflation through inflation targeting. So before Ben Bernanke, central bankers wouldn't even admit they have an inflation target. Now they tell you all the time, right? And then his expertise was in a depression. I'm like, that's weird. Why would they want that guy in charge? And of course, now we know, right? What's the name of which book? The other one? I'd have it's in my closet. This one is just inflation targeting. So it's not necessarily a recommendation. I'm trying to tell you what I was doing back then. Right? Joseph, I'm adding a part to fxbootcamp.com so that the downloads will be there. Oh, the one in the closet. Hang on, let's see. Yeah, I don't see it. Yeah, I don't see it. I don't know where it is. There's too many books. All right. Yeah, just Ben Bernanke depression. So they were like a series of essays on monetary policy during the Great Depression. So just Great Depression book, Ben Bernanke. I'm sure you'll find it. Sultan wants to know the fundamentals of why oil should be bullish. Why don't you take the course? Okay. So again, today at 4 p.m., I will be delivering lecture number 3, focusing on really, I'm going to start with coal. So you're going to learn the difference between coal, oil, and natural gas in its formation, the geology of how it was all created, where in the geology it lies, where it moves, how it moves, where it can be found, and then how it can be found. So I don't know. I'm telling you, it's awesome. So I'm looking forward to that. You guys can still join. Would anyone here recommend it to a fellow trader? So lecture number 3. Okay. So you might say, so Wayne, you're focused on this. Well, no, I added one. Okay. Geology. How oil and gas and coal was formed, where it was formed, how we can find it, and then how do we verify it's there before we drill an $8 million hole in the ground. And so I have added one, and then this. So the next one is we're going to go right into how do we get it out of the ground. And we're literally going from, this hose connects to that hose to this machine. This machine does this, this, and this. So, this substance goes out of that whole hose, and then this other thing goes to this pipe and goes to this other machine. And this is what this machine does and how that works. And so we're literally going over the infrastructure, like the equipment. Okay? Okay? So anyways, let me pop this in. If you don't like the Tinder girls, you can join the oil group. There you go. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you later.